The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everybody. Basil Chapman. This is the Monday edition, Monday, May the 21st edition, and of the Tiger Technicians Hour, Monday, Wednesday, Friday, 11 o'clock till noon. 2 great hours start off the TFNN programming here. Steve Rose has completed a great webinar, all-day webinar on Friday, so he was back today. 9 o'clock till 10 Eastern Time. Then next hour, joined with Tom O'Brien. Great show as always, that the duo together, just covering a wealth of material. And then, of course, I come in here, and then after me, noon to 1 o'clock, Larry Pesavento, Trade What You See, and then we have Dave White, Monday, 3 o'clock, and Tom O'Brien wraps it up at 4 o'clock till 6. Full programming and many opinions, and this should be one of those days where when you assess where we've been, what we've done, where we're coming from, and where we're going to, there is just a tremendous amount of evidence right there. This is what we'll do. We'll go through the numbers. The Dow is at 12,461, up 92. The S&P's up 14 at 1309. Comp index is up 34 at 2813. Gold is minus 3 at 1588. Silver is down 51 cents at 2820. You got platinum up 5, and you got high-grade copper up 3 at 349. It's attempting to try to form some kind of a bounce base right here. Crude oil is at 92.17, up 69, and bonds are down half a point at 147.28 30 seconds. Now, let's go through what I consider to be the weight of evidence. On Friday, we took off in my opening call. It's my daily service. It goes to subscribers, an incredible amount of detail. I wonder if I've got, maybe I'll show some of it a little later on. But most importantly, what I said to subscribers this morning was that there are a couple of things that we're looking at. One is that the Dow went underneath the 200-period exponential moving average, very sharply underneath it. It's very sharply under the 12,006. Oh, that was at 12,004. At the time, it was 12,470. And the 12,006, I think it was about 19 to 28 area, was the support for that. So that was the support all the way up until it broke down. The Dow broke down after the 13,338 top on May the 1st, broke down on the 4th of May, plummeted under the 9-period moving average, exponential moving average, and now that is resistance, 12,619. So I wanted to take off our double short that we had. Nice profits, just it wasn't the point. The point was I want you to play the trend, and I want you to do it on a short-term basis, even though from the entry point we got in, I could really have held it and said, you can bounce as much as you want. You're probably not going to take out our position. I just want you to clear my head out of that. I kept our shorts because the stocks that I chose to short are stocks my monthly charts are saying and the weekly charts are saying far more serious top coming to those stocks. Sector tops. That's very important. They've been winners, great winners, and now they are not. So that said to me very clearly that the depth of the decline from 13,338, didn't type that in, to 12,336. Oh, I love when they do that. It makes the arithmetic so much easier. And, funny thing, in the United States, people always talk about the math. It isn't the math. This is not math. This is arithmetic. Just you're subtracting. That's all you're doing. So it's an expression that I've never gotten used to. There's some expressions that I think are just fantastic. The one that I always find is misleading is to call arithmetic math. You're not doing any mathematical equations here. You're just subtracting. So we've gone from 13,338 to 12,336. I would say, given the arithmetic involved, that we're very close to 1,002 points down. Well, that says, this says in 13 sessions, you've had 12 declining, and the one little pathetic candle that was an up candle, the white candle over there, if you're looking at Tiger TV, that really was like a halfway marker. You know how we always look at candles? I have certain candles that we look at. This turned out to be a halfway marker. So it says, ready for a bounce. I have to call it a bounce. Why? Because this pattern invariably sets up, unless it's an incredible V-shaped pattern, I don't see anything to trigger a V-shaped turnaround. We're going to rally and then come and test somewhere near the lows or below the lows. And that's going to be really important. The pattern that I call the dreaded H, straight down, make an arch formation, fail, and come back and retest the low. It looks like a lowercase h. That's what I think we're going to do. Now, if you look at all the other evidence, this is amazing. My short-term trading index, it's developed on Richard Arm's index. Actually, it's the Arm's index that I stare at every single day. And I just use particular numbers for my set of rules, different set of rules completely to Richard Arm's. And what I'd say, last week gave fantastic readings about whether there should be a slide the next day or a rally attempt and all that. Then on Friday, and this is the one thing that I'm going straight to my calls as soon as I finish this at 877-927-6648. But what I said to subscribers last week, we're watching that Trin index, because the Trin index was basically ignoring the sell-off. And one of the things I mentioned in my opening call was we have not had we've had pretty much the daily looks as if it has the characteristic of a waterfall cascade, but I don't consider this a waterfall cascade at all, because there were very few triple-digit down closes. There were lots of triple-digit down days, but not the closes. That to me is a real waterfall. And even the 120. Then I've spoken about this particular pattern. If you're looking at Tiger TV, this is just fantastic to see. Do you see the relationship, the inverse relationship between the price here? This is the 120-minute chart with the ChapmanWave notation, and this is the volatility index with the ChapmanWave notation. You see this cup formation here on the VIX, the volatility index. You see the way the Dow is making this arch. Very often I use this as a mirror image, and when the two get close, even of course, they have no idea that they're getting close. They're only getting close because they're on my chart, one above the other. Otherwise, you would never know that they're getting close. Mentioned this on Friday, that I was anticipating that we're really close, especially if you look at this down channel. Now, you see this line here? See, there's just one trend line. You see this trend line here? Just one trend line. I'm going to give a course toward probably the last week, probably the Friday, the 8th of June. We're just finalizing it right now. It'll be up on the front page probably today or very soon. And I'm just going to make the techniques that I introduce you to, this simplest technique. I'm going to spend just a couple of hours, and we're starting at 8 o'clock, and on those first couple of hours, I'm just going to go through the ChapmanWave in its simplest notation, because it really is important if you can do that, the ChapmanWave. It gives you an insight into buy modes, where they can complete and where they continue. That's really important, more than the sell modes, but the buy modes. But more importantly, I'm going to show you how you can take two things. Look at this. This is one left side, the left side right ellipse, or you can call it the semicircle, quarter circle, and the left side over here. How you put them together, there to make a left side arch that continues to the right side and where it tests. Then I'm going to teach about the left side, right side price time edge. Look at this beautiful little one over there. So these are going to be how can I use the simplest of tools? And you know what's so beautiful about this? You can add it if you do Gartley's or butterflies, if you do Fibonacci extensions, all of this. It's an additive technique. It enhances whatever else you're doing, because it refines it. I've seen so many times a Gartley or a butterfly looks perfect, but it doesn't give you that exact pinpoint of a price turn. It can give you the Fibonacci extension range, it can give you the one-to-one, or it can give you exactly what the approximation is. But the actual turn very often occurs when you get that peak D or E in the smaller time frames, and that's really important. So to me, it's going to be to what we do here at TFNN. We'd love to teach. It's going to be an extension of techniques. It's going to be an addition to other techniques. So I'm really looking forward to it. So I wanted to go through that to say that the volatility index hit 2512 on the 120-minute, peak E, I'm anticipating a pullback there. That would give you a spike to the upside. And look at that beautiful doji candle that we had early this morning at 5:18. Oh, today's the 21st, on Friday, the last candle. So now we're ready for a nice move, maybe to test the the down channel. Now, this is another technique that I'm going to choose. How do you add another trend line? And what does it mean? I'm going to show you what this means, because this is going to be red. And then I'll change the color over here to green. And those are techniques that I will teach. What happens when it gets there and stalls? What happens when it breaks above? So those are the techniques. The Dow is in a sell mode. This is a counter trend rally. All I can say is that the 200 period moving average, exponential moving average, is sitting there at 12,478, and it's like a magnet. The price should try to get above it. The 12,618 level should be the beginning of a repellent, but in fact it's been down so severely that it's even possible to get to 12,719. That was the breakdown. Remember the left side, right side price time match that we were looking at before? And that's what I would anticipate would be pretty much the maximum to the upside before we can really tell is it going to go higher, or are we coming back to do the retest. Let's go to Rick in Longwood. Hi, Rick. How are you?
Basil, it's sorry to disappoint you. It's Mike in New York.
Oh, did I lose Rick? Oh, okay. Hi, Mike. I'm not disappointed at all. How are you?
Okay. I wanted to look at Baidu. If you were inclined to short Baidu, at what point would you get short?
All right, hold on. So Baidu is 120.10. It's up $4.73. This is a very interesting chart formation because Baidu has completed its monthly huge buy mode. Now, for anyone looking at the Tiger Technicians Hour, what we're looking at over here, you see that little semicircle that is blue, like an oval? That was when I circled it once before to show that it was sitting on the 200 period exponential move. Baidu split. And that was one of the split. Oh, there it is. Okay, yes. That was the low that we were looking at in the candle formation. You can still see the letters A, B. So Baidu split. And then what did it do? It came back to, I can't remember. It was split from 170 was it down to 80? I can't remember. But right now you can see that this peak A that we've got right now at $9.67, whatever the split was, that's where it was once before, and that was up in the 120s. How did it split 4 for 1? Something like that. I don't know what it did, but it was a big split. So what happened is it went to 165.96 in the monthly chart. It's a Chinese internet company, Baidu Inc. It's trading at 120.26, up 489. Now, the monthly chart, we're looking at many of these patterns right now where it looks like it could very well turn into a dreaded H in the monthly, or it's going to have an up channel, and the support is going to be absolutely key now. So let me have a good look at this. We're looking at Baidu. I'll talk about that, and we'll come back. We'll talk with Marvin about the spies, and there was a call about GE, and we'll also look at G because it is an important component of my Dow Quartet. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back. Tiger Technicians out. Dow's up 84. S&P's down up 12. Isn't that fun? For the first time in quite a while, we say Dow's up, S&P's up, Q's are up, IWM's up. And we're on right now with Mike in New York. We're looking at Baidu Inc. And what's really important about Baidu, it's been a spectacular stock. It's just... Chinese internet company, kind of the Google of China. They've just had it all their way. But there's really, in the technical evidence of the monthly chart, you've got the stochastic that's only down at 54%. The MACD, a fast-moving average, the yellow line, if you're looking at Tiger TV, is deflected low. This is what I'm going to suggest. When I look at the daily chart, you can see I've squashed it a little bit, so the lettering might be cut off, but the actual chart pattern is very clear. What's happened is it has tremendous resistance in the 140, I'd say the 145 to maybe the 155 area is where the most resistance has been. Hey, wait a minute. It's had tremendous support between the lows of December, around about 110, to the major low of October, down at 104. So there's a trading band that's set up very clearly, and you can see that in the monthly chart, there's that arch formation. Well, wait a minute. Look what's happened in the weekly chart. We've got a peak C1, C2, slightly lower. Instead of peak D, it was slightly lower. So that says you've got to be careful. You've got a high of 154.15 the week of the 30th of March, and then 152.85, 84 and 85 week of 17th 13th and 20th of April. But the major high that was made was a peak E high. Now, this is a technique that I discussed, actually on air I was discussing. I said, there's a technique that I use called the ChapmanWave flat base restart. What that says is, it recycles very much like an instant restart, except the price keeps coming back. And then over the past year, but especially the past 3 to 4 months, I've done a lot of work, and it says that the price can actually, within the context of still a buy mode, without breaking that, it can actually slip just fractionally under the original price, as long as it doesn't take out the low that took leg D, the previous leg D, up to its high. Well, if that's the case, I would say that all the evidence that I'm looking at would say that I have a target of that left side start, which would be around about 95.12, wow, to 91 on the 200 period exponential moving average. That's looking at, that's not now with, I'm not using it as a time sequence rather than a price sequence. Now, you didn't get short on this move down, right? So now you have to wait for a rally, because I do believe that the weight of evidence says there's a much better chance that the upside is limited until a lot of testing is done, and that testing will be between 122 and say 117. That's really going to be key. 113. Once it breaks 113, it's on its way down. So I'm going to say to you, have a little patience. You might not get an opportunity to short Baidu. So I'm going to say to you, start a small position above 125, but knowing that it's only a small position, you really want it to somehow spike to 130 to 132. I don't know if it can do that, but if it doesn't, I'll know much better by the end of the day, and certainly by Wednesday. But if there's a rally and it's able to take out 125.39, the high of the 15th of May, I suspect it'll go at least to the gap towards 129.31. So somewhere going above 129 to 132 is where you want to add another small position. If it starts to roll over and starts coming back down, I would even add another position, and I would make the tightest stop on a core position somewhere around 133.53, somewhere around there. But I would start off slowly. So have a little patience. I want another day of rallying in Baidu. If it can get anywhere close to the it's 126 to 129 area, I would definitely start a small position, and you consider it one position with the intention of adding another one, at least, what did I say, about another 8 to 9 or so points higher. And then you will have to wait for that arch formation to really get a confirmation. Once it starts down on the next turn, then the weekly chart kicks in, and then the monthly chart, because you want to see the candle of the 30th of December, the candle of December with a low of 110. That's really the target for the beginning of June. So I hope that helps you, Mike.
No, it does. It does. Thank you very much.
Thank you. And, of course, I'm totally wrong if you short it and it suddenly goes to 135, 137. That's a V-shaped pattern. I don't think it's going to do that. Let's go to
the moving averages. It's below the 200 and the 50-day.
But they're all turning down. Yeah, it doesn't look good. So thank you for calling. Marvin, what did you want to look at?
SY.
Yeah, the SPY. Yeah, I thought so. Okay, great. Folks, we'll be back with Marvin. We'll look at the SPY, and I also will look at GE, because it's a core position in our holdings, and it's an important stock. So we'll look at it when we get back.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. And let me just say that if anyone calls and you're in a hurry, it's really easy for me. I'll just stop you, especially even if it's in the opening segment where I really like to give the overview. I don't mind. If you're in a hurry, I'll just do it right on the spot. I'll stop, and then I'll come back to what I was talking about. So, Rick and Longwood, sorry that you couldn't wait, but we'll do GE. Meantime, we've got a great caller, Marvin in Orlando. We're looking at the SPYs. So the S&P depository receipts. I've got a chart here. I meant to show it to my subscribers this morning, but I'm going to show it right now. From the October low, is that the first or the second? Let me just check. From the October 4th low of 173.43, I've got a Fibonacci time cycle. Now, I know someone who uses these Fibonacci time cycles and does an unbelievable job with other techniques that he's developed. I've just found that when it hits, it is amazing, and when it isn't, you don't hear a word. You know, it's like cycle dates that miss, or when they hit, everybody say, "Oh, fantastic!" When they miss, well, okay, go on to the next one. You have no choice. That's just the way it is. So that when they work, they are amazing. If you look at this Fibonacci time cycle, look what happened. It went right to the top. A little messy. Let me expand a little bit. It went right to the top. Oh, no, that wasn't it. The top of the most recent rally to 141.66, which was just slightly under the 142.21 high of the 2nd of April. So there it goes on the 1st of May. Here's another thing I love to look at. Have you noticed how the very beginning of the month, for the past quite a while, has been a very important day, especially with lows going back to even October, that is October the 4th. So what we're looking at here is that this Fibonacci 144 time expansion from they call it the 0.89, it's an 891 that was back in February the 10th, which was really just a doji midway point. But this one turned out to be perfect. So it's one little thing, but look what happened. You see this dashed line, if you're looking at Tiger TV, that dashed line, I moved it 1 bar away. I had used that, if you remember, to show the disparity between when the high of 142.21, the peak E top was made on the 2nd of April, how the stochastic was way lower and the MACD was making a deflection lower. And that when it came to this particular point, the MACD was way under the previous high. The stochastic had rallied, but by that second bar, it has crossed negative and continued, and then it broke under the 9-period exponential moving average. Just wanted to go through that, and the 200-period exponential moving average at 131.56, that was pierced Thursday and Friday decisively on the close. Today, where did the price stop? 131.46. Where is the 200-period exponential moving average? 131.56, within 10 cents. So I suspect it's going to get close. So now the question is, Marvin, what are you doing?
Well, I was trying to see what kind of bounce we're going to get and what's a good position to short it.
Okay. I'm looking to reshort the Dow under certain conditions. I'm also quite prepared that such a huge chunk of the consolidation has been made that I have to be wary that there isn't a V-shaped recovery here today. I, in fact, had 3 stocks that I was looking at in my opening call to go long, and although I knew it was just a perfect day to do that because the risk was so slight that these particular stocks would break under the low of Friday, I said, I'm prepared to wait one day, even if I miss a good chance. We'll see what happens. So here's what I'm looking at. When you look at the stochastic, the slow stochastic, that's the red and yellow lines right here. If you're looking at Tiger TV, you will see that instead of the V-shaped turnaround, which has produced fabulous turns to the upside almost every time, when it's gone flat, in fact, there aren't many times that it has gone flat. Let me just double check. Yeah, when it goes flat, as it did back in August of 2011, you can get a bounce, but you're liable to bump around the bottom. Most people will remember what I kept saying daily. There's a dreaded H that could become an M. That M pattern is a continuous pattern. It turns out that you can make a whole bunch of little arches until you break the left side low, which was 110.27. Remember, I did the same thing with the Dow Diamonds. So now the question is, and the Dow Diamonds also had a beautiful Fibonacci on the exact same day, expansion. That's a cycle expansion Fibonacci on the 1st of May. So I have to take this as a good chance that it's a serious top. And in both the SPY and the Dow, they've pulled back very dramatically. So here's my question. If we can watch it together, I suspect that it won't be until Tuesday afternoon or Wednesday morning, maybe even Wednesday afternoon, if 2 things happen. If, in fact, the repellent line on the SPY, which we're looking at right now, which it missed by 10 cents this morning, is taken out by the end of the day, but certainly by tomorrow at about 20 past 10 in the morning, and it's holding, and the volatility index, it's really dependent on the volatility index. The volatility index is still up in the 20s, but it's pulled back dramatically to 22.77 from the A, B, C. I recycled the A, B, C, D, E, the peak E top in the 120-minute chart. If the volatility index at any point this week breaks and closes under 20, this rally will continue. If it holds in the 20s, I suspect that we're going to be looking at, and this is on a close, that is at the close of the day. If it holds in the 21, 22 area today and even tomorrow, that's saying, hey, you know what? That SPY is going to have a tough time pushing much higher. So here's what I'm looking at. The one scenario says that by the end of the day, there's another burst of energy because all support levels are holding and everyone's just sick and tired of the downside. And it says that there's a chance that the SPY could try for the 9-period exponential moving average of 132.95. It'll be the first time it's even touched it since it broke down on the 4th of May. That's 1 month ago. Almost a month ago. No, it's not. It's 3 weeks ago. So that's going to be very important. I want to see the stochastic, which is at 2%, get to 12%. That is really tough. For the stochastic to get to 12%, you're going to have to see the SPY climb decisively into the candle of the 17th and really get to the 132.96 plus area. It has to really get to the 133.15s, 133, I'd even say 30 area. Then you're going to see the volatility index for the first time in quite a while spring back very strongly and get towards that 13-15%, which would be good for a bounce to continue. If in fact it fails, then you've got to anticipate there's a retest. So the two scenarios are close towards the high of the day, has a good chance that tomorrow by about 30 minutes after 10 o'clock a.m. Eastern Time, it's going deep into the candle of the 17th, somewhere into the 130, 33, 30 area or even higher. And then we'll see how the 9-period moving average holds going into Wednesday. But Wednesday will probably be the chance that I'm saying, okay, maybe now we turn down, but after such a deep correction, maybe it's 3 days, maybe it goes to Thursday. But the area I'm looking at is between 133.50 and 134.40, somewhere around there. And the previous low was 134.36, back on, for the left side, right side price time match, back on the 6th of March. So I hope that helps. It gives you some sense of what I'm looking at. If there's a failure and we're close towards the low of the day today and tomorrow just cannot even make it, you might have missed a great opportunity to short, but probably then we're going to test and close under the 129.55 low of Friday. So that's the scenario I'm looking at. Now, on a longer term, if your question is, where could I short and feel a little more comfortable holding for a longer period, the best opportunity was to hold any short that you had from much higher up because you had a big cushion. So that means that the 134.97 level on the 9-period moving average and the weekly chart is really going to be critical. If by Friday it actually closes above that, besides being a bit of a surprise to me, we'll have to watch to see if bonds have pulled back very sharply and the TBT is running. Have to see if we made the peak D in the dollar. The dollar's in peak C, still needs to go to D. So it's sort of complex, but those are the parameters that I hope help you.
Great. Thank you for your help.
Thank you very much. That's Marvin Orlando looking at the SPY. Where to short or reshort, those are the parameters I'm looking at. Now let's look at GE, because GE, for me, is it's a financial, but it's an industrial. It's got to have some strength that holds above the 9-period moving average of 18.97. We're still long our core position from the 1627 level back in, what was it, the first week of November, I think. December. Yeah, this is December. We have something else that we're still holding from November. Now, this is what I'm looking at. GE trading at 19.05 is up 11. It's 53%, 0.53% today. That's way better than one would expect in many of the stocks. So 0.53, the Dow's up 0.65%, the S&P's up 0.91%. So in a way, it's good, but it's lagging. So that's not good. I don't like that, because the other day it was actually leading and it did not pull back dramatically. Why? Because they said something about increasing the dividend to GE Capital, that part of GE. So that's good. So this is what I'm looking at here. If GE can hold, it's at 1906. If it does not close underneath 1885 in the next 2 days, but actually starts leg B up above 19.26 in the daily chart, that really helps the weekly chart a lot. And that 120-minute chart shows that the resistance around about 19.27 to 19.27 to 19.48, how it can overcome that resistance is going to be very, very important. It had a fantastic up channel for quite a while in the 120-minute chart. Once it broke that red bottom line, that was a negative, and it started another channel line. That channel line, actually, you know what, this is more like a pattern that I call the falling axe. No, you can use it as a channel, but I'm going to treat it as a falling axe. Why? Because I want to see how that expanding cone formation is pierced, hopefully sometime today. I say hopefully because I want to see strength in some of the my Dow Quartet. And the Dow Quartet consists of, I use it as a phantom index, consists of GE, IBM, which broke down on Friday and had a great candle this morning, and so far the second 120-minute chart is trying desperately to push to the upside to break above the 9-period moving average. It's at 197 and 14/30 seconds. So this is going to be very important. Let's go to our next caller. We've got Mark in Denver. Hi, Mark. How are you?
Good. How are you doing?
Very well, thank you.
Good. Hey, what do you make of the fact that the dollar's holding well and the TLT is holding really well?
First of all, they are for them to be holding well right now are market negatives. That's number one. That's just the simplest answer. Number two, it means for the dollar and bonds at right now, as you've asked me the question at this particular time, that's very positive. Why? Because the MACD and stochastic of the daily chart in the dollar says at 89%, that is still a lot of strength, and the MACD, the parameter between the yellow line, that's the yellow moving line, moving average, that's the fast moving average, and the red slow moving average, and the histogram itself, these vertical lines, says there's still tremendous support in the dollar, and that's the reason why I have to remain very cautious on the market. I didn't really want to go into new long positions, even if they were just very short-term trades, only because my thinking is that I don't want to get sidetracked until I get a weight of evidence that says that the market can move sharply higher, not just a bounce, but sharply higher and sustain that move. I prefer just to be very cautious. So that says to me that the dollar making another cup formation and having had a doji and hasn't yet closed above and maybe hasn't yet closed below the doji parameters of 81.68 on the high side on the 17th of May and 81.24 on the downside, tells me that if the TLT closes underneath 81.24 today, I would say that we're within 1 to 2 days of a bounce. And that bounce could take the dollar. I didn't mean I think I said TLT. I meant the dollar. If the bounce should take it to leg D up, and leg D should be over 81.76. At that point, I'm suspecting that there's a retest, not of the lows, but of the lower area in the Dow and the S&P. I won't talk about the Qs or the IWM just yet, but I'll talk about that. And that's going to make a potential for a double top in the dollar, something that I have to be wary of because the stochastic and the weekly is only at 71% and the MACD is just turning up. Great action in terms of the weekly chart having gotten back to the previous high, but when you think that the Dow had a 1,000-point move, the dollar really should be above 81.78. It should be at 82.50. So as far as I'm concerned, that is going to be a big issue. So, if you want to hold on, and we'll talk about the TLT.
Sure.
Okay, great. So we're on with Mark in Denver. We're talking about the dollar, how it's held up so well, and how the TLT, which is trading right now at 124.04, just close to the high of Friday. That's also a positive for bonds and the dollar. I'll be right back.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman. We're back with Mark in Denver looking at the TLT. So, Mark, the TLT, if you're looking at Tiger TV, you will see that from the 109.69 low of the 19th of March, it ran up to a peak D, then a peak E at 118.41. It pulled back, and then it ran up in another buy mode, and then I have alternate wave counts, but it's gone to a D. And that's probably going to be a peak D today if it doesn't make a new recovery high. Days young, anything can happen. But it's also at the 261.80 extension in that upper range. So that always says to me, this is where it's extremely positive. But on a shorter-term basis, what happens is it starts to conclude. It's like a coda. It's like the final phase, leg D here. And then it does a test, and it does a test under the 261, which is at 122.90, somewhere around there. So I'm going to be looking at this, and if the TLT in the next 3 days, by Wednesday afternoon, Wednesday morning, Wednesday afternoon, Thursday morning, if the TLT is under 121, let's call it 121.50. If it's under that, that would be the first time that we could see the stock market have the opportunity to rally, hold a rally, and I anticipate that at that point the dollar has made it doesn't have to, but I suspect that it could make a leg D because it's had this 3 overlapping waves, and overlapping waves are very important when you go to leg D. It makes it for a very strong move, which it is, because it's over the most important one at 80.74. The dollar index has gone to the high of Friday of 81.78. So now what I'm looking at is there's a chance it goes to leg D. I suspect within the next 3 sessions we're going to get a very good sense of whether this is it for the short term in the dollar and in the dollar and the TLT in bonds itself. But if that's not the case, then our stock market becomes highly vulnerable. So that's going to be very important. And as I said before, I make it real simple. The VIX, the volatility index, is pulling back, and it too in the daily is in leg C up. So I'm suspecting, like the dollar, there's going to be one sudden move to the upside. So I think we're real close to a test of Friday's lows, or the lows of today for any other index that made another low today. And that's going to be key. So I'd be looking at a chance to get something like the TBT. If the TBT, which is 200% short, it's the ultra-short Lehman 20-year Treasury bond fund. If it touches this downtrend line that I've got here, and that probably comes in at about between 1610 and 1590, that's probably where I'm going to say, okay, is it time now? But you realize that if I'm buying the TBT, that very often says that the market is probably going to move up with it. So that's the relationship. So I'm quite happy with. I think I'm still happy. Yep, I'm still happy with the short positions we have in my opening call. I'm still satisfied, not happy with the long term, the core positions that we have, that we're holding. I only say that because the one has given back more than I wanted, but it's still up very nicely. So I'm trying to handle core long positions with short positions and looking to add some short positions on any bounce. That's my attitude, but I think the market's going to give us a lot more information via the VIX, the dollar, the TLT by Tuesday afternoon, Wednesday morning. Hope that helps you.
Yeah, thank you.
Thank you very much for calling. Now, folks, I just wanted to go through this. Remember on Friday we looked at the 38. There were 6 round number 38s on Facebook. Well, it went from 38 to a round number 42. Those round numbers, especially for IPOs, are extremely helpful. I'm going to teach these techniques the time frames, what to look for during different time periods of the day, how the VIX works, how the TRIN works. I'm going to make it simple. I did not want to make it complicated. It's going to be something that you're going to have 10 bullet points, of which 3 to 4 you use every single day. Trend lines, support levels, round number. Look, 33 round number today for Facebook. So far, that's holding very nicely. So we'll work that way. Thanks for being here. Stay tuned for Larry Perseverante. It should be a wonderful show as always with Larry. Then Dave White at 3 and Tom O'Brien at 4, and I'll be back on Wednesday. My service is the opening call. Check it out.